All right, all right, all right. Welcome to Ask the Trader. I know this is an impromptu video. All right, so welcome to Ask the Trader. Let me make sure that my volume is on. All right, so what I would like for you guys to do is I want you to, if you want me to analyze one of your stocks, I want you to put that stock in the comment section. In the comment section. And I want you guys to give me one stock, right? Give me one stock. And if I look at that one stock, then maybe you can give me another stock later. Don't give me a list of like 10, 15, 20 stocks because I'm trying to get to everybody's stock today. All right. If you have a question, go ahead and ask that question in the comment section. And if you want your face to show up with your question, you can go to the top of the page where it says StreamYard and you can approve that your face can be seen. Some people like to stay or remain anonymous, and that's okay. But if you have a question that you want me to answer to the best of my abilities, I'm going to try to do that for you because I am a full-time day trader. My name is Joel Harrison, but I am a full-time day trader. I am an expert in stocks, options, futures, and cryptocurrency. I have over 10 years and over 25,000 hours of trading and investing experience. All right. So I'm not a rookie. I've been in this game for a very, very long time, over a decade. But anything that we talk about today are the opinions of Joel Harrison. So I want to make sure that you guys do your due diligence. Go out there. If we talk about a stock today, learn how to read charts so that you can take that information and then try to apply it. That's where a lot of us adults, we are adults here. That's where a lot of us adults go wrong. When it comes to the stock market, we don't treat it like a business. This is a business, guys. This is real money that's being invested or traded in the market. So you guys got to make sure that you approach it like a business. If you don't approach it like a business, then it's not going to work like a business. If you approach it like a casino, it's going to be like feeling like you're in a casino. If you don't know what you're doing, then you have to get educated, and that's why we put out courses. That's why I have webinar week this coming next week for you guys to educate yourself on the market. So my claim to fame is that, I went from riches to rags and back to riches. All right. And I did that through the stock market. My first stint at accumulating wealth was through the real estate game. Right. And I love real estate. I own real estate now. But I approach real estate totally different now. And it's from my education of the stock market. I always believe that the stock market is the building blocks of business. I tell people that all the time. It shouldn't be the last thing that you learn. It shouldn't be something that you learn after you make money. If you learn the stock market, you're going to understand how businesses work. You're going to understand why oil can affect restaurants or how oil can affect airlines, right? But if you're only specialized in one area, you're not going to get that knowledge of the market. And that's why I always encourage everyone to be investing in the market and trading in the market. All right. So again, this is Ask the Trader. If you're just now joining, if you put your questions in the comments section, right, I'll be able to pull them up just like this, right? And if you're interested in looking at something like this question just came up, hey, afternoon, respectfully request analysis on Dutch Brothers. You can do that in the comments section, okay? And I'm going to try to get to everybody's question, everybody's stock within the next, hour 45 minutes, depends on how long I can go without without getting tired. All right. But again, how do we navigate through these treacherous waters that we call the stock market? Now, I have a proven system. I have a proven track record. And you have everybody in the world trying to analyze and trying to figure out how to handle a market like we're experiencing right now. And it's understandable, right? If you had just gotten into the stock market, if you just started investing in November or December, it can be challenging for you because right out the gates you started losing money as an investor. Well, this is how the market works. All right. I'm not trying to tell everybody that you're going to lose money in the market, but you're going to lose money in the market. And that's why it's so important for you to educate yourself so that you understand at least why you're losing. Right? If you've taken any of my courses, it's not so that you guys can learn specific indicators or learn how to read, candlesticks or it's not the education behind the stock market. It's understanding why you're in it in the first place, because some people are in it for the wrong reasons. And if you're in it just like most of us are in it to accumulate wealth, then 99% of the people that I come in contact with are approaching it incorrectly, right? And I rub people the wrong way because I'm a statistician, and I'm a realist, right? I love reality. I love the reality of our situations. And so much of us feel like we think we know, but I tend to want to listen to people that have come from an educational background that's shown you the processes, or that's gone through the processes through experience, right? And that's just how I am. When you're talking with me, I'm going to be blunt and real, like, all right, you're giving us this information about this stock, like, why is it, why are you giving us this information? Like, how much money are you investing in it? Like, what is your goal? And most of the time, we can't answer those questions. So when you think of what would Joel do, which is my business, it's not so that you can glorify me. It's so that you can go through the processes of understanding how to approach the market, like what, when, where, why, and how you're buying that particular stock. If you can't answer those particular questions, then you probably shouldn't be buying that stock. Like, what are you buying it? When are you buying it? Why are you buying it? How are you not buying it? What is the goal? Right. And if you can't answer those questions, you probably shouldn't be investing it. It can't always be, I just want to make money. Right. Well, okay, if you want to make money, let's be realistic, right? Let's look and see what the performance of that stock has been. Is this the type of stock that can grow 10 times its value? Or is this a trade? And as a consultant, this is where I break down the market. And I don't want to confuse the market for a lot of you guys because it can be overwhelming. But if you can break down the strategy behind why you're buying Apple, that's going to answer probably 99% of the questions that you have for people like myself. If you're buying Apple and you're looking for it to double in price, says my brain automatically says, oh, Apple averages about 20% a year. So if you're looking to get a double in Apple, you probably got to wait 3 to 5 years. But when I tell people that, they get frustrated because they're like, Joel, I can't wait 3 to 5 years for my stock to double in value. Well, that's the reality of this market. And that's where so many of you guys go wrong. You come into it with unrealistic expectations. You're listening to all of these different people, and you don't know how to go about doing it. Can you get 100% return in Apple? Yeah. Can you get it faster than a year? Yeah, but you probably are going to probably have to go into the options market. Maybe you're going to have to try to catch Apple if it's 50 or 60% down. And then when it goes back to its highs, you can earn 100%. But there's a reality behind your goal. And it's not about educating yourself on a million different indicators. And I see you guys doing that a lot too. I put out posts where I say, hey, you know, um, you know, um, you know, if you want to enter the market and you want to stay consistent with the market, it's not about taking all the education that you possibly can. Getting educated on the market, learning 50 different indicators, or learning how every pattern works with the charts is not how you make money in the market. The way that you make money in the market is figuring out what your goal is, and is the market going in that particular direction? And if it's not going in that direction, about how long will it take before it starts going in that direction? And I know I make it seem very easy, but remember, I'm a consultant that consults people on a daily basis, and you'll be surprised at how many people can't follow along with that simple process. Why are you buying it? What are you buying? Why are you buying it? When are you buying it? How long do you plan on being in it? How much can that stock actually drop before it goes to the prices that you think that it can go to? Because all I see you guys doing is hot potato, trying to get in and out, in and out, in and out, in and out, in and out. And that's not how you make money in this game. And again, you're not going to learn. I always tell people the way that you're going to learn in this market is A, is going to have to be from experience. B, you're going to have somebody like a coach or a friend or a colleague or somebody, an accountability partner, where you guys can go through the processes together. And when you feel like jumping off that boat, you have somebody that says, hey, wait, we already put this in place. We already said that this stock could possibly drop 20%. So why are you jumping out because it's 10% in one day? Yeah, you probably bought it today and it's down 10% the next day. But if the goal is to make 100 or a 200 or a 400% return, you got to be able to stomach some of the drops, because that's how the market works. It's just faster than everything else. All right, so let's get to business. Investing is a lifestyle. Investing is a lifestyle. When you approach the stock market, you gotta incorporate everything. The stock market is everything around you, right? The stock market is your Kroger and your Walmart and your Apples and your Teslas and your BMWs and your Adidas and everything that you have on, everything that's around you. It's the stock market. So if you feel like the stock market is going to zero, then you really feel like there's going to be an atomic bomb that drops and our existence is over, right? But if you believe that we're probably going to be around for the next 5, 10, 15, 20 years, right? Then you have to believe in the market. And if you believe in the market, you got to approach the market. And in order to make money in the market, you got to be able to withstand the ups and downs of it. It's just like a marriage. Once you marry that particular stock, it's till death. It's supposed to be till death do you part, right? Through sickness and in health. And a lot of you guys, the minute that stock starts to get sick, you guys are out. But then once that stock becomes healthy again, it ends up going higher than you ever thought that it can go to. And that's the reason why so many of you lose money in the market or don't end up making the money in the market, because you guys don't have goals. When you don't have a goal set for a stock, it's going to feel like a gamble. And that's why you need people like me that can hold your hand, that can walk you through it, so that when you're asking me questions or concerns, or when we're doing things like this, it can validate those emotional feelings that you're having, because fear is normal. Wealth is built from investing. And I tell people that all the time. Wealth is not built from trading. I ain't met no trading like the richest people in the world are not traders. I keep telling people that the richest people in the world are not people to get in and out the market all day long. Now, those traders that are trading the market, the reason why they end up becoming wealthy is because they're using trading as a 9 to 5 job, and then they're reinvesting in stock. And that's the part that you don't hear the wealthy people talk about. That's where, when I come into play and I tell people, look, 90% of my funds is invested, 10% of my funds is traded. Most people are like, huh? And I'm like, yeah, that's how most wealthy people are set up, because wealth is not created from trading. Trading is a 9 to 5, people. Trading is a 9 to 5. If you don't reinvest the money that you make, you're going to be in the same position 10, 15, 20 years from now. I have friends to this day that will not even talk to me right now because they're ashamed, because they've seen I've been preaching the same thing for probably 7 or 8 years. And they said, no, Joel, I'm going to prove everybody wrong. I'm going to trade to build all the wealth in my family. And they made money. But just like in any other 9 to 5 job, I could be making $750,000 a year. I can be in the NFL and making $10 million a year. If I don't reinvest that $10 million, people, I'm going to be in the same position that I'm in right now 10 years from now. It's just common sense. And as adults, you guys got to start growing up and start getting sophisticated in the way that you position yourselves in the market. And yes, I said that because I'm getting up there in age, right? I'm an OG, and I'm trying to tell you, young bucks and your old bucks, that wealth is built from investing. If you're in your 40s or 50s right now and you don't have access to 100 grand liquid, you've been playing for the past 10, 15 years. Yes, I said it. Yes, it makes you feel angry at yourself and mad at yourself. Because if you had just had a IRA or most of us can open up an IRA. If you have a job, you have a 401k. If you're putting away $6,000 for 10 years, that's 60 grand. That's 60 grand off the rip. 6,000 a year for 10 years. If that $60,000 was invested in the most simple index that everybody and their mom is invested in, which is what your wealth planners put you in, which is the S&P 500, you would be easily sitting on 100 grand right now. So if you're not sitting on at least 100 grand, you don't know what you're doing. And you're playing around and you're overthinking this easy game of making money in this market, which is why I've been encouraging everybody to start on their foundation first. 10 years is going to go by just like that. But all of us should have a nice little cushion that we sitting on, 100 grand, 200 grand, 500 grand, because with that solid foundation, you can go out there and trade and not feel like, oh man, this stock is down, hey, 10, 15, 20%. I don't feel bad because I'm sitting on 200 grand. And I know in the next 10 years, that 200 grand is probably going to be worth 400 grand. And with that mindset, knowing goals, knowing where you're going to be, it's going to allow you to be able to trade the market a lot easier. You guys are listening to a millionaire. It's not about learning all of these different indicators and getting in and out the market and seeing the market going down and saying, well, I'm just going to wait around because the market's going down. Joe, why would I buy the market if I see the market going down? Because you don't know how to invest, because every single solid wealth planner that's out there that's legitimate is not telling you guys to get out the market right now. Not the legitimate ones. They're all saying, first of all, we're not going to put all your money into the market. We're going to build it slowly, month to month, until you have that nice little cushion. But because we're so smart, we think we can outsmart everybody. Well, guys, this is real. This is reality. Joel is a realist. I don't care how you feel. I don't care if I hurt your feelings, because it boils down to real money and real assets. And the people that have built those accounts, like myself with my family, I'm trying to tell you guys the formula. I know it seems hard. I know it's like, Joel, I don't want to wait all this while. Okay, that's fine. Trading is fun. I get it. I'm not bashing trading. I just don't want you to get into the habit of being afraid of the market. So many of you guys are afraid, scared of the market, scared, right? You just want to get out. It seems so scary. Joel, why would I invest now? There's Ukraine. And listen, for the last 13 years, every single period that felt like this was always the best buying opportunity. I'm sorry, it just has been. 2008, 2009 crisis, real estate crisis. We didn't think we were ever going to get out of that. Well, 2 years later, we were sitting at all-time highs. That was the first time that I got fooled. And I said to myself, I'm never, ever, 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 ever going to listen to a thousandaire or a trader tell me how to invest in the market again, because they don't know what the hell they talking about. They're too afraid. They're too scared. Fear is the reason why so many of you guys can't get into the market. So you just want to trade the market. And I keep saying this every day in the room. I keep saying, I always put out information about the market. And I always say, it's easy to say, hey, I told you guys, see, the market's going down. It's always great to stay out the market and then validate it when the market goes down. It's hard to put money in the market. Most bears are never, ever, ever going to tell you when to get back in the market. Even the guy from The Big Short, yeah, he made a whole bunch of money. Like the real story is that cat almost went bankrupt and then he was able to wait it out and then he finally made his money. And when he made his money, did he tell y'all when to get back in the market? Because the money that he made when the market fell, he could have made 1,000 times more than that when the market went back up. They don't tell that story. They always talk about the big short. The most you can make when the market falls is 100%, unless you're buying puts. I get that. But the most that you can make to the upside is infinite. The most you can lose is 100. And I know that's everything, but you can start over. I lost everything and then got everything back. But the most that you can make to the upside is infinite. You guys got to overcome that fear. Y'all worry so much about losing, you can't win. I say this all the time. Y'all worry so much about the market. But Joel, it's going to go down. I don't care. Because you'll be sitting in something, and just like 2 days ago, these companies are going to protect you. Amazon, people that think about it. These guys became billionaires for a reason. They understand the market way better than you because they billionaires. Jeff Bezos understands the market way better than you. They know what to do to get the market to turn back around. Everybody knows that Apple and Amazon and Google make up like 25% of the whole S&P. So if those three CEOs got together and said, "Hey guys, we about to just buy up our stock," they can turn the whole market around by themselves, and it doesn't matter what's going on in Ukraine and everywhere else. If you've been in the market long enough, you're going to understand that. You think it was coincidence that Amazon came out and said, "Hey, we're going to do a stock split and we're going to do a $10 billion buyout or buyback purchase where they go back and purchase their stock." That shouldn't even be legal. Like how are you able to buy back your own stock? And you know everything that's going on with the company, you know the earnings projections, you know all of that. And you're able to buy back your stock. This is what they do. They know how to artificially inflate the price of their company. They're experts at this. Y'all are not experts yet, right? So you have to start investing in periods like this. But as an investment, you got to say, I don't want you guys to just blindly, what Joel just said, blindly go. So I'm just going to go buy United Airlines. No, you definitely want to buy in something, a company that's been showing you in the past 3 to 5 years that it's been growing even through these types of conditions, right? And that's what you learn during webinar week. But you got to have faith in the market. You got to have faith in our system. You got to have faith in the United States. The dollar is still the go-to. America is still the go-to for investments. When nothing else is working, everybody invest in America. And America is becoming number one at everything, right? Electric cars, solar, all of that stuff. We're trying to get everything back, right? But you guys got to quit worrying. It doesn't mean that you can't trade. You just got to stop worrying. There's a 90% chance that the stock will eventually go back to the highs. I know COVID put stocks at a level that, it just put stocks at an astronomical level where stocks were valued way too high, right? And a lot of those stocks are getting beaten up right now. But stocks like Apple's not getting beaten up. Stocks like Google and Amazon, they're getting beaten up, but they're not getting beaten up. So yeah, the speculative companies are getting smashed. But when you first start, that's not where you first start. You first start out with the largest companies that are out there. This is something that I preach during webinar week. And then as you start getting better as an investor and trader, you can start making speculation plays. Okay. And that's all you guys are seeing right now. All the speculative stuff, all the companies that are just a little wishy-washy, they're taking them out of their portfolios. It's almost like you're the CEO of your business. You lined up all of the employees of your company and you said, all right, I'm going to go with this star team. Everybody else, I got to cut. When things are good, I can pay everybody. When things are bad, I got to go with my core group. That's all that's happening right now. People are just shedding all of the little scraggly stuff like the cannabis, right? Some of these speculative companies, some of these electric car companies that's trying to start out, yeah, they're getting smashed. But the companies that push these electric companies like the Teslas and the Fords and the General Motors, they're still remaining stable. You guys are now understanding that now, right? So now when we have a period like this, I hope you guys are learning from it. All right. Think about this: when a stock drops, you make more money if it ever returns back to its all-time highs. Will Apple ever see its all-time high again? Probably. Will Amazon see its all-time high? Probably, especially now that they have a 20-to-1 reverse stock split. Will Google ever see its all-time high again? There's a very high chance that it will. Well, Google and Amazon and Apple are all 30% down. If they ever go back to their all-time highs, you're going to gain 43%. And if it goes even higher, that's how you get those 100% returns. Yes, beating up companies that are down 90%, that can give you a 900% gain. But the market usually doesn't invest in these stocks until we feel like, hey, I've made all my money in Apple and Amazon and Google. Now I can buy something speculative, right? Now I can buy second, okay, I make all my money at Amazon. Maybe I can go buy a Shopify. Oh, I made all my money in Visa. Maybe I'll take a shot at PayPal. Maybe I made all my money in PayPal. Hey, maybe I can take a shot at Square. All right. You got to start thinking like one percenters. Okay. But you got to make a 10-year commitment. You got to make a 10-year commitment as an investor and you got to stick with it. This wealth is built through investing, not trading. Right. It is. It just is, unless you can reinvest the money that you're trading with. That's what I want you to do. You go out there, you spend $5,000 on a Tesla option, you end up making $50,000. Run it back. Take 45,000, put it in the stock, and then take $5,000 and then try to find something else you can make $50,000 in. That's how you become wealthy. Not spending 50 grand, going and buying a car, and then say, hey, I'm going to run this again. And then you take $5,000 and then you lose it. Now you do have a car, which is still cool, but now you don't have any capital to trade with. Okay. That's how a lot of you guys are operating. You'll make money in it. Just learning the what would Joe do method during great times or bad times, you're going to make money. What you do with that money is how you gain your wealth. And most of you guys just don't know the process yet. You guys are not systematically putting money into yourselves. All right. Investing is a lifestyle, right? If you had just put that $6,000 that I was telling you guys about for 10 years, you should ease everybody who's investing in the market for the past 10 years, all you traders. If you're a super trader right now, I'm the best trader that's out there. Well, do you have $140,000 sitting in your, in an account somewhere? If the answer is no, then you don't know what you're doing. And that's how a lot of you guys are approaching the market. And a lot of you guys that feel this way, that you don't have to invest in the market, you're scaring people out of investing in it because you're too afraid to put $6,000 into your account. And that's why you're in the same position 10 years later. I lost a couple of people just off of that because they can't take it. They can't take looking in the mirror and saying, Joel's right. I've been bullshitting for 10 years. I should have put $6,000 into myself, into the S&P. I would be sitting on 140, but what happens? You guys come up with excuses. Well, this happened and I broke my arm and I was going through a divorce or uh, you know, I lost some friends, COVID happened, I gained some weight, I got kids. I got all the same problems y'all got, except I didn't get a divorce. All right. Okay. So I understand people go through situations. Still doesn't mean that you shouldn't be investing in yourself. All right. You going through a divorce, you should be putting money aside into some type of, and you got to have an investing strategy. You need an out. Oh, shoot. We're about to split everything down the middle, or I'm about to lose everything. I need to figure out a plan. I need to hire a financial planner because this is about to be destructive on my future. All right. You guys got to wise up. We got to stop with the excuses. I know we're going through things. I lost so many people during COVID, so many loved ones in the last 10 years. It's very hard to keep up with my friends because we're all going through things. If you're married and you have kids, there's ups and downs in the relationships, there's ups and downs financially. All right. That's why you guys got to systematically understand it. You got to make this a culture. You got to make this a habit. Okay. But investing is a lifestyle. Investing and trading is easy. Y'all make it hard. Y'all do. So many people hate when I say that. I mean, y'all get irritated when I say this because you're like, I'm losing. This is not easy, Joel. I'm losing. How long you been investing? 2 weeks? Come to me 2 years from now. And then let me know if investing was hard or easy, because I guarantee if you just stick with the market for 12 months, 24 months, you gonna be all right. I've been where you are. I know what you're going through psychologically. I know what it takes to get through it. The way that you get through it is you just got to keep adding to find some good stocks that you like and keep buying them. There's gonna be sunny days again. This is how it feels when you're investing. This is how it feels. This is how it feels when one percenters buy things on sale that everybody else is not buying. This is how it feels. It feels terrible. Feels like we're never gonna get out of this. Feels like we're gonna be in war with Ukraine. Well, Russia's gonna be in war with Ukraine for 10 years. Feels like interest rates are going to go to 15%. Feels like inflation's going to go to 20%. Feels like real estate market's going to crash again. And then what ends up happening? The government says, all right. You remember that $5 trillion we said we was going to print? We was kind of holding off on it because we wanted to see how low the market could actually go. Because if we gave y'all the $5 trillion back when everything was at their all-time highs, we were going to go to levels that were just really, really obscene, where the rich was just going to be terribly rich and the poor were going to be terribly poor. So we had to hold off 12 months, bring the market in a little bit, and then we'll start printing that $5 trillion and start creating the infrastructure again. And that's what we're going through right now. I'm going to get to you guys' stocks, I promise. S&P. I go through these slides every session because you guys need to see this. Joel, I saw this last week. You need to keep saying it, especially if you don't have an IRA yet. Because it's going to click one day, and I don't want it to click. I don't want to be the I told you guy 10 years from now, because I want you to create wealth. Because if you think I'm cocky right now with the amount of money I have now, wait till you see me 10 years from now. And you're going to be like, how did he go from here to way up there? Because I'm showing you guys the system. And once you get the system in place, your wealth starts to grow exponentially. Been there, done that. I've been there where I could only do $50 every 2 weeks. And then overnight, you're like, dang, I'm putting 1,000 away. Like, where did this money even come from? Right? I've been there, done that. But you got to start with yourselves. But you guys got to also understand how the stomach falls. Like, even if you had $100,000 Straight up. Let's just say you inherited 100 grand and you said, you know what, for 10 years, I'm just going to put it in the S&P. What has the S&P done over the last 10 years? Well, it took 4.5 years, guys, for that 100,000 to even get to 200. It took 4.5 years. Can you imagine putting something, 100 grand in something, and you had to wait 4.5 years for it to double? Okay. That's a lot of stress. That's a lot of days that's got to go by. But believe me, time goes by. And even during that period, that 100 went to 137 and then it dropped back to 107. That's kind of what we're experiencing right now. A lot of people right before COVID may have had 250,000. They 250 probably went to something like 500. And now they sitting on 250 or 300 again. And you feel like I didn't make any money over COVID. But what you also don't understand is that the market doesn't move sideways. It goes up, down, up, down, up, down, up, down, up. It staggers up. It stair steps going up. Some of you are trying to sell here and buy back down here. This is where you should be buying back. But you know what ends up happening? You end up buying here. I'm sorry. You end up riding this up by luck. You sell, and then this happens. And then you try to buy it back way up here 3 years later. And then it drops all the way back down to the price that you started at 4 years prior, when you should have just kept your butt in the market. Like Joel, I shedded away some of my portfolio. I didn't sell all of it. I'm not telling you guys not to sell anything. I'm just telling you guys what the 1%ers are doing. The 1%ers right now are holding their core positions and they're selling off their losers. So if you got a Jumia in your portfolio, sell it. If you got a Canopy Growth in your portfolio, sell it. If PayPal is giving you a lot of trouble, sell it. But you should not be selling 100% of your portfolio. Not 100%. Maybe 20, 30, maybe 40, even 50%. I give it to if you sold 50% of your portfolio. Because now you should be reinvesting in your core companies if that's what you believe in, right? And that's what you're going to start seeing people do. If Tesla drops to $600, ain't nobody going to care about Ford and General Motors no more. Because why would I invest in Ford and General Motors when I can invest in the leader and the leader is down 50%? Because if the leader gets back to its all-time highs, I just made 100% return in the leader. Why am I going to buy the speculative ones? That's what you're starting to see. I'm not saying that that's what you should do. But as these bigger companies start to come down in price, people are going to take their money out of the speculative joints and put it right back into the leaders, because the leaders are leaders for a reason. They lead like I am. I'm a leader. I'm trying to show you guys what I'm doing and how I'm doing it and why I'm doing it and where I'm doing it too, because I have a goal. I understand how this works. I'm trying to get ahead of the good news that's going to come out. I'm trying to get ahead of the $5 trillion infrastructure money that's going to pour into the market and ride us all the way back to highs. I'm trying to get in front of it. Y'all are trying to wait until it happens. You're trying to wait until it happens. I'm not 100% invested. Well, I am now. But I wasn't 100% invested over the last 3 months. I kept telling y'all I was about 65% invested. And as the market started to come down, I would buy, 10,000 here, 20,000 there, 30,000 here, 20,000 there, until I was totally 100% invested again. Now, do I feel uncomfortable now that I'm 100% invested? Yeah, I do. I feel just like you do. Can the market drop some more? Yep, I can drop another. My portfolio can drop another 50%. But I didn't sell everything. I wasn't in it all the way at the top. And then now I'm getting in, right? There's a process. All right. Okay. So let me get to you guys' stocks. All right. 16 years, if you had just invested 1600 into the S&P 500, 16 years, it would have taken for you to become a millionaire. So if you got a 401k right now, I keep telling everybody max it out. Max out that 401k, because if you're putting 1600 into something like the S&P, you can have the freedom of knowing that you at least will have 500 to $1 million in 16 years. This is real statistics. The S&P has already been averaging 10 to 15% for the past 30 to 40 years. So seeing it average 13% a year is normal, people. And if you can get in now before the market starts to ratchet up in price, right, you might be able to get, you're able to get a lot of that money in at the lows. And if we go lower, you're still buying it every single month. All right, so if you don't have my app, hold on for a second. Sorry about that. I don't know why my printer just started. But if you don't have my app, let's do What Would Joe Do app. You can go to if you don't have my app, you can go to the What Would Joe Do app on Google or Apple Store. It's free. There is an alert service. I do send out alerts when I'm buying things, when I'm selling things. There is an alert service for all types of things, right? Hold on for a second. All right. So that's the What Would Joe Do app. All right. It's free. All right. Again, there is an alert service. I send out alerts when I'm buying, when I'm selling. Uh, when the market is doing well, there is a bias to the upside. I will give out options plays, 3, 4, 5, 6 months out. We're in a period right now where trading, especially options, if you're taking 30, 60, 90-day options, you're probably losing, because I keep telling y'all 30-day options is the hardest way to trade. And with this uncertainty, you know, it's almost, I tell people getting in and out the same day is actually safer than trying to hold something overnight, because we have no idea what can happen. A missile can go off and you can lose money on it. All right. So if you're doing options, I want you to go way out. No more 2 months, at least for now. No 30, 60, 90 days. You probably want to go like 200 days out if you can afford it. All right. But I start putting out those types of alerts. If you want your charts to look like mine, because I have some of the most beautiful charts in the industry, you can go to my PayHip and you can download my Thinkorswim chart setup video. Uh, every indicator that we talk about today, you're going to be able to use on your own. All right. You're going to be able to set up your charts to look just like mine. All right. I know I get it all the time. Joel, your charts are so beautiful. The most beautiful charts I've ever seen. I get it. All right. If you want your charts to look like mine, all right, download this particular video. All right, you can take classes if you're into stocks, options, futures, crypto, just about anything that we talk about today. I have a class for it that you can download and do it on your own. But the best option, you can buy these classes individually. Everybody's taking advantage of the Ultimate Membership Service. Now, if you're taking the Ultimate Membership Service, because it's an app that I just created on my own, and I have YouTube and all of these other moving parts that's going on with it. If you decide to do the Ultimate Membership and you sign up for it, email me and say, Joel, I just signed up for the Ultimate Membership Service. Then I will send you guys the links where you're going to get every single video that I offer. You're paying $50 a month. You're going to get any and everything that I offer, right? This is the best deal that's out there. There's nobody else that's doing this. And you're going to get access to everything that I talk about, because it's important to me that you guys get educated on the market the proper way. All right. I don't play games. Like, anytime you do a consultation with me, we can kick it, but it's all about getting educated. All right. I don't want, I always feel bad when I feel like people don't get their money's worth. You're going to get your money's worth by taking this Ultimate Membership Service. Anything that I've ever created is something that I would personally purchase on my own, because I see the value in it. All right. And anybody that has an Ultimate Membership Service, you guys get the special rate for 45-minute consultations instead of 30. So if you do want to do a one-on-one consultation with me, it is going to cost you $50. I get booked out all the time, but you're going to get an actual coach. We do Zoom, we go in, we talk about what's going on with the market. You can ask me anything about the market. It's tailored to you. I've had people come to me with their plan. Joel, this is what I want you to talk about, and this is when I want you to start talking about them. All right, let's follow along your plan because it's your money. I run it, but it's about you. All right, so many people take advantage of it. If you're not part of the Ninja Trading Room, the Ninja Trading Room is only for members that have bought any of my products. So if you purchased any of my products, I reward you guys with a special room where, there's just traders talking in that particular room. And most of the posts are going to be mine. So some people, in the insider trading room, they don't really want to see everybody's posts. So if they want to see specialized posts just from me or see what I'm buying and selling during the day, they'll join the Ninja Trading Room. All right. So I want you guys to be part of both. For you guys that got friends and family that's out there that don't have access to Facebook, you can always go to my YouTube page. What would Joel do? There's free videos there. This is actually going to be there as well. Actually, not this one, but there's other videos that are there. And most of you guys are already part of the Inside of Trading Room. There's one more thing I need to add. There's webinar week coming next week. And where is it? Webinar week is next week. It starts on Tuesday, Wednesday, and Thursday. All right, it's $95. You guys are going to learn how to buy stock. The second day, you guys are going to learn the options market. Yes, guys, you will take this class, and on the next day, you'll be able to trade options. All right, and you're going to get a free futures video. A free futures video where after you watch that 2-hour video, you're going to learn how to trade futures the next day. And I'm going to teach you guys how to day trade the market, how to get in and out the proper way. I see so many of you guys trying to make money on a daily basis. And I listen to y'all strategies and I just laugh. I be laughing all the time because of how complicated y'all make it. And y'all swear faux cheese that that these traders that are selling Rivian or these traders that are buying Apple on a daily basis is using the indicators y'all are using. And I keep telling everybody that it's a facade. You're learning all of this stuff and you're putting it in the background. And what's happening is the trades are covering or going to certain areas, but that's not why they're going there. It just so happens to go there. And I tell people that all the time. If you're going to trade an indicator, if you're going to trade a system, don't look at just one day. I see teachers do it all the time. They'll teach a whole class off of one day, make you believe that this is what happens every day. And it doesn't. You got to look at it over a 14, 21, 30-day period. And if that's the case, come to me and say, Joel, look at this indicator that I'm using. In the last 30 days, this happened at this particular mark and it won 95% of the time. Then you're going to get Joel interested in it. But if you show me 1 day or 2 days, that doesn't tell me that strategy works. The strategy that I've been teaching, the What Would Joel Do method, we've been doing this for 2 years now? I ain't changed, right? It's the same strategy every single time. And it wins 75 to 80% of the time. They're going to be losses, but it's going to win more than it loses. You just guys got to learn it, right? And I teach it on day 3. All right, let's get to your stocks. I got that out. So welcome to Ask the Trader. All right, let's look at some of you guys' stocks. Oh, and let's go back to that first question. Good afternoon, Joel. Respectfully request an analysis on Dutch Brothers long term. Appreciate your time and knowledge, brother. I appreciate it too. I can't see the Facebook user, but I appreciate that, right? So let's look at Dutch Brothers. So if you don't know how to pull up a stock, let's say you get Dutch Brothers, right? And you're like, Joel, I don't know the ticker for it. Well, you can go to Yahoo Finance, type in Dutch Brothers. And as you can see, the very first ticker symbol that pops up is BROS, right? So then I go to my advanced system. The keyword, guys, was long term. Y'all see how I got A plus B? Now, Long term can mean a couple of things. Long term can mean 1 year, 2 years, 5 years, 10 years. So I still needed a little bit more information, but I got enough information to at least know what chart to look at. Right. So I can pull up the one, I can pull up the 200-day chart. Right. And as you guys can see, the stock just IPO'd on September 15th, 2021. There's not enough information to give us to let us know if it's above its 200-day or below it. But it did give us enough information to know that it's been ranging between 81.40, because if it says high there, that means that's its all-time highs. That's the highest that it's ever been. This is the lowest that it's ever been. And that's a beautiful thing. If you bought this on the very first day, you rarely see this. You rarely see a stock that when it goes up in price, it never comes back to its low. So you can automatically see the range of the stock. 81 is the high end. Looks like 35 or 40 is the low end. You can also see a support area right here. Okay. Right. So there's support at $41. So if I was a betting person and I wanted to invest in this, Joel would immediately go over here, set an alert. If you were using the what would Joel do method, you know, and if you're thinking about buying some of it, that might be an area that I want to get alerted, right? If it gets to this $43 level. All right. If it starts to go up in price, what's the first price we can go to? Well, guys, now that you guys can see a chart, if it starts to go up in price, we know it's probably going to go at least to $3.45. Well, I'm sorry, $63.45. I need to put my glasses on, right? So even if instead of me trying to guess, and that's what a lot of us do, if I bought it today, Joel, and it goes up to the price that you think it can go to, this resistance area, how much money can I make? Well, the answer is, if we're here and we rise up to 63, you're going to make about a 29% return. All right. If it ever goes back to its all-time highs, you're going to make a 66% return. You guys now see how I automatically know realistically what I can make, and then about how long is that going to take? Right? This is what March the 11th. It's telling us that if it really started to go in this angle, which it doesn't, I mean, I know it sold off in that angle, but that's probably the fastest that it can get there. It's going to take a little bit, right? So, these are some of the things that you guys can use to kind of analyze what's going on. I also see a head and shoulders pattern. But guys, just because I see a head and shoulders pattern and I know this pattern doesn't mean that means you should be buying it. It's great to understand it. It's great, a great conversation piece, but why are you buying it? And that's the part that me and traders always argue with. A trader will come in here and try to analyze this candle by candle. And I'm like, what's the goal? If the goal is to make money when it gets here, none of these candles matter. What matters is support and resistance when you're trying to make money long term. Don't nobody care about what happened here and here and here and here. This engulfed that and that engulfed that. And I got a hammer here and an upside. Like, nobody cares about that. And I see you guys arguing and talking about that all the time. And I just start laughing. And I'm like, man, this is so funny because none of that crap matters. None of it. No, there's no money manager that's sitting back and saying, because I saw a hammer, I'm going to go ahead and put 15 billion in this stock. Now, as a trader, think about it. As a trader, I might think different. But as a trader, I'm not going to use these charts because as a trader, yeah, this is telling me what is done, but it doesn't tell me if this is going up or down. We don't know if this is going to drop here and stay here for the next 6 months and then go up. Trading requires shorter time frames. That's why I don't want you guys mixing 5 different charts to try to figure out what can happen when you can't understand what's happening in one chart. Learn one chart first, then you can start adding charts. Okay? Because as a trader, if I was going here and I said, if somebody said, Joel, I want to trade Dutch Brothers, I want to make money in 7 days. I got all the information I need. Oh, what can it do in 7 days? Well, in the last 7 days, 1, 2, 3, 4, 5, 6, 7, we range between 43 and 53. Bam. Think about that. So if you're trading, you already know it's in a $10 trading range. Y'all don't even do this. Y'all, oh, well, what is this? What is this candle doing? And what is that candle doing? And I'm like, what are y'all talking about? It's ranging $10. You want to make money in 7 days. So then we have to ask ourselves, if I want to make money in Dutch Brothers in 7 days, is the momentum up or down? Y'all pulling up a month chart talking about, well, let's see what's going on here. Well, if I want to make money in 7 days, it looks like, I don't know. So let me pull up the 15-minute chart. Let me pull up an hour chart. Let me pull up a day. And I'm like, you're using too much information to try to figure out a simple answer. The question was, Joel, I want to make money in Dutch Brothers in 7 days. Well, first we need to know which direction is going in. So if I want to make money in 7 days, Joel's going to pull up his hour chart. I'm simply going to ask myself, is this going down for the last 7 days, or have it been going up for the last 7 days? So when I erase everything, now that I have new information, I don't need 12 freaking charts to do this. I quickly ask myself, is this in an uptrend or a downtrend? So I'm going to erase this 50 and this 20 and the 200 since it's not there. So I can make this a little bit easier. Joel is going to tell you guys that when we're below the Ichimoku, everybody knows this. I think I need to make a song about this, right? When you're above the Ichimoku, you can go up for 7 to 10 days. When you're below the Ichimoku, you can go down 7 to 10 days. When you're above it, you can go up 7 to 10 days. When you're down it, you can go down 7 to 10 days. When you're above it, you can go up for 7 to 10 days. When you're down it, you can go down for 7 to 10 days. I make this so simple. Y'all make it hard. Well, Joel, I think I'm going to take this other class and this other class, and I'm going to learn this and I'm going to learn that because I need an edge and I need to know when to get in. I'm like, you haven't learned fundamentals yet. And you trying to take other classes? Learn the fundamentals of why you're doing what you're doing first. Learn how to dribble. Learn how to keep that elbow up when you're shooting. Learn the fundamentals first. Then you can develop a crossover. Then you can develop different areas that you want to shoot the three. But you got to learn how to shoot the three first. You got to learn how to dribble first. And y'all aren't learning how to dribble. Y'all are immediately trying to cross somebody up, and you never learned how to dribble. So when you try to cross somebody up, that's why the ball goes, that way or out of bounds. And you're like, why did it go out of bounds? I saw Allen Iverson do it because Allen Iverson learned how to dribble first, and then he learned how to cross over. This has been going down underneath this Ichimoku. We're now above the Ichimoku. So what can you do now? If I was to buy this to the upside, I have a higher chance of winning 7 to 10 days now to the upside because there's real buying pressure. It got above it here on Tuesday. Well, it's Wednesday, Thursday, Friday. You 3 days into another 7-day move. When it went below the Ichimoku over here, 7 days, Friday, all the way to Friday. And then you got a little bit extra. You got 14 days here. Well, if I got 14 days down here, I might be getting about a 14-day run to the upside, maybe. And then, you want to use maybe if you want to look at the candles and try to figure out how to get in, you can use that to give yourself a little bit of an edge for it to go up in price. But you see how I easily would have been like sell, and I would have been like buy. I would have been like buy, and I would have been like sell. Y'all see how easy this is? Sell, buy, sell, Goodbye. You would have been right here. 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 You would have been right here because you would have said, Joe, I only want to make money 7 to 10 days. So I know the chart to look at. But if I look at this chart on this day, and then I go and I say, all right, I'm going to look at the month chart. Then now I'm going to look at the 200-day chart. How the hell am I going to make a decision? That's what y'all are doing. And that's why it's so hard for you to make money, because you ain't learned how to trade one chart yet. Learn how to trade one chart, one indicator, then come to me. Then we'll add some stuff to it. Learning 5, 6, 7 charts now, you ain't gonna ever make money in the market. I've been there, done that. Y'all are gonna keep me in business. As a consultant, I will be in business forever because you guys are learning from people that actually don't know how to trade or invest properly. Or they're educating you and forgetting to teach you guys the fundamentals. So you're entering classes that are too advanced for you, and you don't know why. You're like, well, I thought I was smart. You're smart. You're learning it. But if you don't have the underpinnings of why that's working, or understand why, what went, like when you guys lose, you should immediately know why you lost. And if that's not the case, you guys need to start back at square one. Okay. All right. I spent a lot of time on that stock because I wanted to show you guys how you could take information, and there's several ways to look at it. So you got to be specific in what you do. And then once you're specific in what you want to do, this part is easy because the chart's going to tell you what to do. But if I look at 7 or 8 charts, it's just exponential. And because I come from a background of numbers, I know that once you start adding an extra number, there's more combinations, right? If I wanted to do a combination of 2 numbers, it ain't going to be but like 2, right? I can do 1, 2, I can do 2, 1, and that's it. But once I add another one, it's 1, 2, 3, it's 3, 2, 1, it's 2, 3, 1, it's 2, 1, 3. Once I add another indicator, now I got 1, 2, 3, 4, 4, 3, 2, 1, 4, 2, 1, 3. You see what I'm saying? It's too many combinations. But some of you guys got 5, 6, and 7. And you need all of these things to line up for you to buy something when there's only a 50% chance that something's going to go up or down. All right. And you complicate it. And a lot of you guys love complication because you think that that's how you beat people. And that's not how you beat people. You beat people by simplifying. Right? You simplify what you're doing and then mastering that. And if they can't stop it, then they can't stop it. That's why Kansas City, like if you're an athlete and you've seen certain teams and they'll run the same plays over and over again because the other team can't stop it. They can't stop it. And it's so simple. They just can't stop it. They're like, we tried to put any and everybody there because it's unstoppable. The only way that I can stop this process is if I lose. All right. And I want you guys to do the same thing. There's an unstoppable way of making money in this market. And you guys are the reasons why you end up losing money. It's not because of the market. It's because of you. All right. So next question. Roblox. All right. I'm gonna run through these now. I promise. I'm not gonna ramble anymore. All right, let's look at Roblox. I didn't see it as a as a trade, so I'm just gonna look at it as an investment. So if we were looking at Roblox, and you know what? I'm gonna take this down. So hold up, give me a second. I'm gonna take part of the banner down so that you guys can see a little bit more of what's going on. All right, cool. So at least you can see down here. All right, because y'all know my websites and all of that other stuff. All right, so Roblox, we're way down here. We're at all-time lows on Roblox. All right, so when you guys are looking at numbers, I don't want you to say to yourself, oh, this is $39. It can go to $1. Now, let's kind of figure out how big this company actually is, right? So if I pull up Roblox, need to know how big it is, right? This is one of the leaders in the metaverse space, right? One of the leading companies. It's a $23 billion stock. All right. And it's gotten punished, right? The highs were 126. We're down at 40. So we're down. The stock is down. The stock is that, well, these were the all-time highs. And we're down about 71%. That's huge. Like, imagine buying this for your sons or daughters or kids or nephews or nieces, and it's down. Well, guys, if you bought one share for 140, you can almost buy 3 shares now for the same price. I want you guys to start thinking with the half glass full attitude. Half glass full. Wow, if I spent 140 here and I believe in this company and I take the same 140, I now can have 4 shares for $280. 3 months ago, I could only have 2 shares for $280. I now got 4 shares for $280, roughly $300. If you believe in this company. If you think that this company is the type of company that can go to zero, then don't buy it. But if you think this company can actually grow, right? If you think the company is going to be around for 5 years, you might want to take a shot. And if you take a shot at it, you just got to know, well, dang, if it just dropped from 68 to 40, can it drop another 50%? Yes. You need to already know that before you buy it. Because if it dropped from 140 to $40 in 4 months, this bad boy can drop 50%. If you can stomach a 50% drop, then buy it. If you can't, then you need to go buy another stock. And there's nothing wrong with that. You don't have to buy Roblox. All right, but you got to understand what this stock can actually do. And you got to see what size it is. It's $28 billion in size. You know, can it drop to 10 billion? Yeah, realistically, it could. Could it drop to 1 billion? I always believe that companies like this, 1 billion is the lowest that it can go. I love buying companies in that $1 billion range. I love it, love it, love it. Because if they ever go back to 10 billion, I just made 10 times my money. If it goes back to the price that it is right now, I just made 28 times my money. That's how you get to $1 million really, really, really fast. All right. So that's Roblox. My brother said gambling. Yeah, you don't want to gamble when you're in this game. You want to buy stocks, and it feels like a gamble if the stock starts to go down in price. But you know what I'm saying? If you know what it can actually do, that's the difference between gambling and investing. Knowing what that stock can actually do. When you don't know what it can do, you are definitely gambling. And of course, because he's my brother, he's gonna say my webinars are the best. So sorry, brother, they don't believe you because you my brother and you support me. All right. But they are the best. All right. Let's look at Marathon Oil. If you've been buying oil, you have been winning in this game. We've been telling you to buy oil ever since I think November. Really got bullish on oil, at the beginning of the year. Now, how did we know to go bullish on oil? Well, I'm gonna teach you guys how hedge fund and manage and hedge fund managers and portfolio managers work. They're not as smart as you guys think that they are. All right, they're smart. They're going to create wealth for you. But their game plan is to, ride the trend until it ends. Last year, the asset class that performed the best out of all the asset classes that were out there was energy. So what did hedge fund and portfolio managers do this year? They said, we're going to keep running this until it don't run no more, because that's what they do. If the NASDAQ was up this year, then we knew at the beginning of the year, that's what everybody was going to buy. So we knew that oil was going to be really, really popular because a lot of people were under invested the year before. It just so happened that it was popular last year going into this year, and then you had the Ukraine-Russia thing going on, which then took it to a stratospheric level. Marathon oil is now sitting way up here. Now, when it gets that high, I got to go back to a month chart. As an investor, you can look at day charts and month charts because you're thinking way down the line. We're right now at this resistance area. Y'all see that this still has another 100% return that it can make. And if this drops and starts to go back up again, we just formed one of the most bullish patterns in the market, which is a upside down head and shoulders. This would be a shoulder. This would be a head. If we drop from here, it's not the end of oil. If we drop from here, Joel would probably look to buy somewhere around here. Why is he picking this spot? Because I'm trying to predict what this can actually do. Because if it gets here and everybody starts to buy it and it starts to go up, when it gets back to this resistance level, it's going to shoot through it and try to go to 42. Why? Because I understand patterns too. All right. So this is a very bullish stock. Very bullish. We're at a resistance level here. So Joel wouldn't be buying way up here. But the question is this a long-term investment? It's different. If it's a long-term investment strategy, that means I can wait. Right? If I want to buy it now, I can buy some at 24. And if it gets to 10, I'll buy some more. I'll buy $24 worth of it again. Now I got 3 shares. Okay. Even though it dropped. Now watch this, guys. This is what y'all don't do because you're so scared of losing. You don't know how to win. Watch this. Watch what I do. Let's say you bought some at 24. This is what y'all do. Joel, I'm lazy. I ain't trying to wait until it comes all the way down there. I'm going to put all my money in right now. So you buy $10,000 worth of it. Or let's just say you bought 1 share. I'm spending all my money right here. But then it drops to $12, right? So let's say you bought 2 more shares and you end up buying $48 more, right? 24 plus 48 because you bought 2 more shares is going to equal 72. You divide that by 3. Guess what your average is? Actually, that's not right. Hold up. What did I do wrong? You bought some for 24. $24, 1 share here. You bought 2 shares here. That should be 48 divided by 3. Hold up. What am I doing wrong? Why is my average 24 and I spent another $24? Oh, if I spent 24 and then I spend another 24, 24 plus 24, yeah, 24 plus 24 is 48 divided. I don't know why my math is off right now. Oh, my average is 16. All right. I had a brain fart just now. All right. So if you bought some at 24 and then when it gets to 12, you buy 2 more shares. If this ever went, you break even when this gets to 16. Y'all see that? So even if this drops, remember stocks are going to bounce, right? Even when they go down, they bounce. Even if this stock does this and it drops all the way down to this price and it rises up to this price, usually stocks are going to go, even when it decides to go down, if you were using Fibonacci, it'll go down, it'll come up 25 to 50% before, it goes lower. Even if it came up 25 and then the 50%, you're going to be in the profit when it gets to this 50% level. And then if it drops to 15, 30 or 16, you can get out even though you started buying it way up here. This is how 1%ers think. They don't care about, the fact that they bought it here. They care about making money. And if they bought it here, and they bought it, at this $12 level, They know that they break even at 16. It's just numbers. I know I made it hard because I couldn't figure out my math just now. But you guys got to approach this with a half glass full mentality. And that's what I do. That's called dollar cost averaging. All right. Someone wanted us to look at Cisco. Now, I don't care for stuff like Cisco anymore because Cisco is just too old for me. But it might be an older individual that's buying it, or somebody sitting on millions of dollars and they don't want it to go down in price. All right, I don't want to make fun of you for putting Cisco out there because I don't know the Facebook user. But let's look at Facebook. Let's look at Cisco. Cisco, from 2003 till now has been doing extremely well. But just because it did extremely well during that period doesn't mean that it's doing well now. So when we pull up a 200-day clean chart, you're going to see that it's sitting at its 200-day right now. Okay. These were the March lows. So the March lows, Cisco rose from this price all the way to $64. That means it was up 83%, right? Now, from the lows to the highs, 83%, that's not impressive to me, but I don't want to put my opinions on a stock because I always tell people, like, if you're in that in that industry, if you work for the company and you're allowed to reinvest in that company and you know how it works, who cares what Joel thinks? Make money on it. All right. I don't want you guys to not buy stuff just because I don't like it. Because this is a bullish company. We hit the 200-day moving average. We have a lot of support right here. And you see how when I draw my charts, I don't draw like I used to be, just like a lot of you guys, where everything had to be perfect down to the dime, down to the penny. And I didn't make money trading and investing that way. You got to give yourself a little bit of flexibility. Okay. Because the market is going to try to get you out of things. It's going to overshoot. You see how it overshot right here? It did that on purpose because it knew a whole bunch of people had their stops. Check this out. The market does this, and it's irritating when it does this. The market overshot. There was a support level right here because of this hammer. Joel, y'all saw that hammer? If it goes beneath that hammer, man, that's it. It's going to zero. No, it ain't. Not always. Sometimes it's just a fake out. It went up in price. It pulled a upside down hammer there. It broke its trend. Ooh, ooh, ooh. We love this. This is for you guys reading the candlestick chart book right now. All right. I see that shooting star, Joel. All right. But look at that hammer. We hit a hammer here. We went above it and then it reversed. It broke below that hammer and then it dropped. Now, this gap, you would not have been able to catch this in real time. Actually, yes, you would have, because I think we broke that low. Let me make that bigger. We broke this low was 56.31. Then this low was 56.27. So we broke it. So anybody that put shorts in to break this hammer was smart. But that was the low. Like, if you didn't take your money that day, that was it. Because we hit the 200-day moving average. And then we started to go up in price. But we also broke this low of this hammer. So a lot of people thought this was it. That's the end of Cisco. It's going to zero. And then people started to buy it up. And they bought it all the way up, filled the gap. And I mean, it went straight up in a line. Now, why was it so bad here? If it was so bad here, how come we hit all-time highs here? Think about that. What happened in 1 month, people? What happened in 1 month for this stock to drop from $59 to 51 and then go back to 64 literally in 2 months? That's the stock market. That's why I tell you guys, you're not going to be, nobody saw this happening from their charts. You have to trade what the market deals to you. If you're investing in this company, you were able to luck up and get this move by buying at the 200 day. Okay. For those that are trading, if you're trading puts and you had bought right here, you should have been out of this trade once you broke this hammer. But the fact that we created a hammer at the 200 day also told you, this looked like it might be going to the upside. But I remember when people was talking about this hammer on Cisco. Which one matters, Joel? This one or this one? Didn't matter, because once you got above that one also, it was off to the races. Okay. Now we're sitting here. Now there's a good thing, right? You got a hammer right here, a hammer right there, a semi hammer here. It's struggling. It's struggling because Cisco actually wants to go back to its highs, but it can't because of all the stuff that's going on in the market. But what I love to see is I love to take notes of companies that I know that are probably, because you got a 90% chance that stocks go to their all-time highs. This is one of those ones that look like it's probably going to do it. It's just that we're in a situation where people are fighting. There's going to be love making later, but you got to get through the fights now. It's a whole bunch of fighting going on right now. Bunch of fighting. We get through the fighting. We get through all of this uncertainty. This is a stock that can go to its highs. Can it go lower? Yeah. But you can't see that in your charts. Nobody right here can tell me from what we're seeing right now, it's a legitimate, we're going to be higher or lower in the next 20 days. We can kind of put ourselves in a position. We can say, all right, long term, can we get back here? Yes. Short term, we've been going down. But just because we've been going down short term doesn't mean that that's the answer. That's why I always tell people to pull up this chart. Because even though it's been going down short term, sometimes you can get some upward movement. And if I was looking at this and we got above this, yeah, there's a couple of losses. Like that would have been a loss. Joel, you said, this is one of them 70% times it loses. 30% times it loses. But if you were able to get in this early and you were able to ride this up for 2 days, you should have been out of this trade for a break even. Then when it broke below it, even if you took a trade somewhere around here, for 3 days, Monday, Tuesday, Wednesday, it gave you a time. It gave you a chance to get out once it reversed back on you. But what was happening during this period, guys? Why is there uncertainty right here? Because this is when the war started. That's why it can't make a decision. Anybody that says that they can look at a chart right now and figure out the decision, no, you don't. You can't. Putin tomorrow can be like, all right, the war is over. And the market is going to go up to 5-10%. Well, it's not going to rise 10%, but it's going to go up big. You don't have that information because you ain't Putin. Unless you Putin or Biden, you can't really move the market off of something that you say. Even the feds can move the market. But what we can do is we can position ourselves in the market, hoping that it can continue going in that direction. If I was trading Cisco, I wouldn't trade it. It can't make a decision. It made solid decisions back here. Look at this. Look how easy it was to trade this stock. Y'all see this? Y'all see this? We went all the way back to May. 7 to 10 days, you made money. 7 to 10 days, you made money to the upside. Here's where you could have made some money on 1 or 2 days, and it broke back up. Then it got above here again, 7 to 10 days. You got below here, 7 to 10 days. You got above here, 7 to 10 days. Actually, about 14 days. That might have been a loss if you were trying to short, but then it got right back up here, 7 to 10, 14 days. 7 to 14 days. Y'all see how I can make decisions very quickly because I'm using one chart, because this chart is how do I make money 7 to 14 days. So depending on the strategy that you have, there should be one chart, guys, one, not three, four, five, one chart where you can literally go back and do what I just did, because that gave me the confidence of knowing, oh, 7 to 10, 7 to 10, 7 to 10, Cisco moves up 10 to 14 days, down 10 to 14 days. So when I see something like this, I know to stay away as a trader. Very easy way to say no. Nah, you confused. You don't know what you want to do. You confused. I'll wait until I see decisions made. Then once I see patterns again, then I'll trade that one again, right? All right. If I wanted to intraday trade Cisco, it would be totally different. I don't need to know all about this. It can be confused as it wants to be. But if I was day trading it, it's totally different. If I'm day trading Cisco, I need to look and see how much Cisco moves. And I'll do a different stock because Cisco is not really one of those good stocks that you can day trade. So I'll look at a different one. Andre said, would you recommend a ledger for your crypto? I have mine in the vault on Coinbase. All right. I have all of my money in vaults on Coinbase too. So guys, what he's talking about is, let's say you decide you want to go into cryptocurrency, you want to buy some Bitcoin, or you want to buy Ethereum, or you want to buy any type of crypto, right? If you're using Coinbase, um, you can, like some of you advanced cryptocurrency heads, guys, you got to understand that 99% of the people that are buying crypto are not advanced as you are. So quit talking down on people and making them feel stupid about cryptocurrency. They're not, even the educated that are out there are not educated on the market, right? So when you start talking about ledgers, and when you start talking about saving your crypto on a something that's on a USB, but it's not, there's no way a person can have access to it, or you're saving it in different wallets, most people don't know what the heck you talking about, right? So when you hear about people getting their money stolen on Coinbase or most of these cryptocurrency platforms, it's because it's just like you putting your money in your wallet, and you putting your wallet in your back pocket, and then you go into a football game. And then if you bump into somebody, you can feel them bumping into you, but you can get pickpocketed. So if you're trading on a Binance or any of these platforms and your money is just sitting there, yes, it can get stolen. But if you store your money in a bank like Wells Fargo, and then you can only pay by using your phone, and then you go to the football game, even if they steal your phone, if they can't get into your phone, then they're not going to be able to steal your money. And even if they get into your phone, right, your money can still be safe, because there's a process that you got to go through to even be able to get your money in those vaults. And that's what Coinbase has done. Coinbase has created what we call vaults, so that your money is stored offline, so that they can't have access, so people can't just steal it when it's there. The only way that money can be stolen is if there's, I think, a two-factor authentication. So they would have to go through the system and from two different emails get approvals from two different emails. And then it takes like 72 hours for that money to be moved from that vault onto your platform, where then they could go in there and transfer it. So you got 72 hours. They got to go to they got to go through two factor authentication. If you got an authenticator thing on your phone, like there's such a huge process that you got to go through, that most hackers will just say forget it, and then they'll try to hack somebody else. So I know that sounded a little bit confusing. Um, if you're interested in buying cryptocurrency, if you go to my PayHip page, there is a cryptocurrency. There's a 30-minute cryptocurrency video that I created for you guys, so that you can learn a little bit about what crypto is and how to buy it and how to store it using the vaults on Coinbase. All right. Somebody asked for Apple for an investment. Andre also asked for Apple as an investment and a trade. Well, first off, guys, let's see how big Apple actually is, right? Apple is a $2.5 trillion company. Joe, why do I need to know that? because you're a rookie and this is where you make your money. Don't nobody care about this anymore. Why wouldn't I care about the share price, Joel? What are you talking about? Because share price is an illusion. Apple tomorrow can decide we're gonna do 100-to-1 stock split, and they can make their stock $1.56 next week if they wanted to. Well, I mean, by law, they got to tell everybody and they got to go through the process. But in 6 months, if they wanted to make their shares $1.56, and anybody that's owned a share is now going to have 100 shares, they're going to create that illusion. And then when everybody says, "Oh my God, Apple is only $1," now you're going to have all those investors that haven't jumped into the market yet and said, "Finally, Apple is $1. I'm about to throw all my money in." And then when Apple drops from $1.50 to 75 cents, everybody's gonna be like, "I don't understand. Apple was $150 and it dropped to $1.50. Like, what happened? Like, it was the best time to buy it. Wasn't it gonna get back to the $155 price?" And the answer is no, it wasn't. It's not about to grow 100 times its value from here. It's not about to become a $200 trillion company. You rookies that are out there. And if you had gotten educated, you would have known this. So nobody cares about this. Nobody except you. If you still out here buying stocks based off of stock price, if you're like, "All right, I got $100, so I'm gonna find the stock where I can buy the most shares," you ain't gonna make money in this game because you're the people that we laugh at. Nobody care. I don't care if you buy one share of something. You can make a fortune off of it if it's the right thing that can grow in value. Stop buying stock based off of stock price. All right, we laugh at you. It's something that we laugh at investing tables. All right, your kids are gonna laugh at you because nobody cares about stock price. It's an illusion. It's always been an illusion. That's why Amazon's doing a stock split, and that's why Google is doing it, because they see that Apple is now the largest company on the planet. And they're like, Apple only became the largest company on the planet because they did a stock split. And when people decided, "Hey, am I going to buy Apple? Am I going to buy Google? 2640? Well, how much can I get for 200? 2640 was, shoot, I'm going to go buy Amazon." And then you look up Amazon and it's 29.58. Well, how much is Apple? I got $2,000. How much is Apple? Well, Apple is 100. Well, that's what I'm buying. My $2,000 divided by 150 is going to give me more shares. And what you just did was you invested like a rookie, but you lucked up because you bought the best company that's out there. But this is what a lot of you guys do. That's not where you make your money. You make your money from here, this growing. If this goes from 2.5 trillion to 5 trillion, your 150 is going to go to 300. Some of you guys been trading for 3 years and didn't even know that. Shame on you. All right, I teach this to 5th graders. All right, stock splits mean absolutely nothing but hype behind the company. And yeah, as a trade, it's kind of cool to be in it because you can make money while ignorant investors pile into it because they think it's cheap now. It's not cheap now. It's just you can have more shares. It's just like a pie. If somebody says, "I'm going to sell you this one pie," it's the same pie. This is what they're doing. I can sell you this one pie for $20, or I can cut this pie up in 10 pieces and look at how many slices you get. But you can buy that for $35. Y'all will be like, "Oh, I can buy so many pieces, so I'd rather just pay 35." And you didn't realize it's the same dang pie. That's all they doing. It's the same pie. They just cut it up in smaller pieces and made you feel like it was bigger than it actually was, and it wasn't. All right, it's the same thing. It's equal. All right, don't get caught up in the hype. I do want you to trade it. That doesn't mean don't buy Amazon and Google. I'm going to be trading Amazon and Google. I already own Amazon and Google. It's just you got to know why it's getting that hype and going up in value. And watch this market cap, because Apple is the leader. So Apple is now a $2.5 trillion company, right? So if this is 2.5 trillion and this is about to get hype, Google can possibly be worth 2.5 trillion also. Ooh. That means it's going to gain about $250 billion. I mean, $750 billion. So I can make about a 50% return if this bad boy decides to get to the same size as Apple. And I'm like, yeah, it's that much upside. No, it's not going to go to $150 and then back to $2,000, people. It's not about to grow 20 times its value. It's not about to be a $20 trillion company. Y'all got to be realistic with your expectations. Like you guys are adults. All right, we got to start treating this like simple basic math because you guys are approaching it like you're in second and third grade. All right, that's why we're doing educational stuff like this so that you can now understand what you're actually looking at. All right. And again, I lose people when I say that. They get mad. Oh, I didn't know that. And he called me a dummy. So sorry, Joel, I'm going to leave your room. You had a member, but now I'm gone. Loss on you. And I'm like, okay, bye. I hope you learned something as you walked out the door. All right. Sorry that the jokes offend you. They just do. I have to do this to keep 20 people on at one time, right? It's just entertainment, people. Quit getting your feelings hurt. All right. So, what can Amazon do? Amazon Amazon is 1.5 trillion. Y'all see how Amazon and Google are like right around the same price and they're both doing a stock split? Y'all think that was a coincidence? They probably talked about it in a room together and they all discussed what they were going to do. All right. That's hearsay. All right. I don't want nobody coming at me saying Joel said, you know. But why are they the same price? Like, is Amazon and Google, do they have the same products? Like, why are they the same price? Because that's how investors approach the market. And they're looking at Apple as the comp of what it can actually grow to. If this grows to $2 trillion in size, you can make a 30% return. Amazon has that type of upside. Okay. And no, when this goes to what's the price going to be? When they do a reverse stock split, they're literally going to take that $3,000 stock, divide it by 20, and the stock price is going to be somewhere around 150. Now, why did they do that? I wonder why. Because Apple's 150. It's the largest company in the world. You about to have 3 companies sitting at $150 a share. And you're going to be like, which one do I pick? I don't know which one to pick. Well, I guess I'm going to pick the one that's cheaper because I can buy more shares. All right. And that's what they're doing. They're creating a game with your money. All right. And it's funny to me because I understand what's happening and why I want to invest in it. But do you understand? Right? What would you do in this situation? Well, I think you should own it and you should trade it. Right? So there's a lot of it's a lot of games being played out there, but I love the games that's being played. But the question was Apple as an investment. All right, let's get to the question. Apple as an investment, all-time highs was 182. We're sitting at 156. How much upside do you have? All right, well, if you bought it right now and it got back to its all-time highs, you're going to make about a 27% return. Well, Apple's been averaging 20% a year. So it might take a whole year to get that 20% return, but wouldn't you rather be buying Apple here than way up here? When are you gonna buy? If you're gonna buy Apple, guys, when you gonna buy it? Like if you're afraid to buy Apple here, then you just don't know how to trade or invest. Because if you can't buy it here, and it's how far off is it? It's what? It's four. Wait, it's let me see how much is down. It's down 15%. At the lows, it was down 17%. Can it go lower? Yeah. I don't want to force you guys into buying Apple. Because we have to break this and start to go up in price if you think it can go higher. But if it breaks this trend, you might be buying Apple at 162, 163. And there's nothing wrong with that, especially if it can go to 182. But if Apple starts to go up in price, guys, we have a upside down head and shoulders if we break this trend. But if we keep going lower, then that head and shoulders that's upside down, that's in place, is not gonna, you can't use it anymore, because we thought it was going to happen right here, but we never broke to new highs. We actually broke lower. And now we're breaking lower, but we're hitting the 200-day. I believe we can get lower than that. Okay. But with Amazon and Google doing reverse stock splits, it's gonna put Apple into play, right? So Apple might ride the wave just because Amazon and Google are gonna be riding the wave. Guys, trading is about to be real fun, because in the options market, we really only been able to trade Apple and Microsoft. You're now going to be able to trade Apple, Microsoft, Google, and Amazon on a daily basis, and the SPY. There's nothing else you need to trade. You're going to have those five, and that's what we're going to be talking about probably for the next 2 years. And it's exciting because now we don't have to look at any other stocks. Maybe grab a couple of oil stocks, maybe grab oil stock, maybe try to grab some retail type companies. But it's going to be fun because now we don't have to really stock pick that much. And that's how they're trying to position themselves in the market. All right. So that's an investment. Let's look at it as a trade. So as a trade, we're underneath the Ichimoku. Nobody should be buying Apple to the upside for the next 7 to 10 days. Why, Joel? I still don't understand why. Watch. All right. Let's clear out everything. Joel says that all you got to do is go back like this. See that? I just scrolled. I didn't care where it went to. It went to November. And just look with your own eyes. When it got above this Ichimoku, it stayed above it 7 to 10 days. Right? If I see a pattern where it stays above it, and then when it goes beneath it, well, it didn't really do it there. When it goes beneath it, you got 7 to 10 days. And then when it gets above it, it goes 7 to 10 days. And then when it goes beneath this yellow line, 7 to 10 days. And when it gets above it, it went above it for about 3 or 4 days and then dropped. And now we're below it. You're seeing the pattern. I'm not trying to force this. I'm not going through 15 or 20 different charts. One chart. One chart says, Joel, the move is to the downside until we break to the upside. Stop forcing trades. Stop trying to be this reverse trender. As an investor, you can do that. As an investor, you can say, I'm buying every time we hit the 200-day because I'm looking 5 to 10 years down the line. As a trader, that's a terrible way to trade. Traders trade off momentum. Investors buy low, sell high. Traders trade off momentum. Good traders. I'm sorry, I had to specify that. Great traders trade off momentum. Terrible traders trade like they do when they invest. It's not the same. It's not. I know this because I'm one of the good traders. And I have statistics and receipts to prove that. And consistency. Guys, don't come to me after you made 3 or 4 good trades. I don't even care if you had a good 6 months. That does not prove that you're a good trader. That just means for 6 months you did all right. What if the market went straight up for 6 months? Then that means you can only trade the market when it goes up. I need to see a full year. I want to see how you trade when the market is up, when the market is down, during slow times, during fast periods. That's going to determine to me if you're a good trader or not. And I see some of you guys trade for 2 weeks, 3 weeks. Now y'all done created a class. You got classes charging $10,000 for it. And then when you go through periods like this and cats stop making money, and then you're wondering, dang, why my strategy ain't working? Because you only understood a strategy that went straight up for 3 months. You didn't understand how to stomach situations like this. Or you couldn't just say, guys, this is a period where you would have lost. Now, let's stick with the same plan. And now you should get a string of wins. There was a losing period in options, that November to December period. I got people right now that are just downing all the options classes that they've taken when all you had to accept was it was a loss. Like, you don't win 100% of the time. The market switched. You started trading during the period it switched, and now you should be making money to the downside. Everybody and their mama that's in the room has been shorting the room as a trade. Why are you still trading to the upside? Everybody's trading to the downside. Everybody trading to the downside. You still trading to the upside because you're listening to investors and not listening to traders. Traders are going with momentum. We're neutral. I might be down one day and up one day. That's why y'all think I'm bipolar. It's not that I'm bipolar. It's that you don't know how to trade or invest. You don't know who you're talking to, right? You got to understand, who am I talking to? Am I talking to trading Joel or investing Joel? Investing Joel is going to approach the market different from trading Joel. And a lot of you guys haven't figured out how to do that yet. And you guys got to know that if you want to do well in the market. But the market's been going down. Nobody's trading the market to the upside. Now, did I take a trade on Square the other day to the upside? Yes, I did. I made some money on it. That was a risk that I was willing to take. But that's not how I trade. I don't counter trend on my trades all the time. Do I do that every now and then? Of course I do. Right? But at least I know why I'm doing it. And if I lost on it, at least I can say, hey, that went against my strategy, but I was willing to take that chance because I looked at patterns and the patterns looked like it was about to do what it was going to do. All right. As long as you're able to answer that question, why did you do it? Right. And if you lose, be able to accept why you lost. Sometimes you guys are losing and then saying, oh, I just need to go take another class. No, it's you. You're the problem. And classes ain't the answer. The answer is either you got too much information going on, too many charts, too many indicators, too many teachers you listening to, trying to create this Frankenstein of a strategy you got. All right, stick with something. Stick with something. I don't care who you go with. Stick with something and be consistent with it. But even the teacher or educator that you're using, simplify what they doing. Simplify what I'm doing. Okay, that's gonna make you better. All right, so as a trade, that's here. Let's say you wanted to day trade Apple. Well, I'm gonna look at my 1 minute chart. And if I know that Apple moves about $4, Apple's ATR, this is how you should have day traded Apple today. You would have said Apple moves $5, right? So you would have woke up today and you would have said Apple moves $5. And you would have said the highs is 162. You would have said Apple moves $5. You would have said, Joe, why are you saying that? Because I'm trying to teach y'all how to trade, because y'all don't know how to. Y'all use the wrong stuff to trade. Apple moves $5. That was the most important thing that you needed to know. What? That was the most important thing you needed to know when you woke up, that Apple moves $5, because you didn't know how much Apple moved. How am I going to know how much money I can make? I can't even answer the why if I don't know how much Apple moves. 99% of y'all trade that way. That's why you can't day trade. And you don't want me to be right. So you guys choose to not learn about the ATR. Apple moves $5. So I would have came here. I would have looked in the morning and I would have said, all right, if Apple moves $5, we're in a downtrend, but that doesn't mean that I should short, because as a day trade, you got to go with the momentum. If they're buying it to the upside, it's going up. If they're selling it to the downside, it's probably going down. Apple moves $5. So what's $5 minus 162? You're going to go here. You're going to say 162 minus $5 is where my range is where I'm going to trade this to. 157. Anything better than 157, you can make money. Right? I'm going to go into the options market and say, what is the heck is everybody buying? Which strike is everybody? Why was it around 157? I wonder why. Okay. Everybody is buying the 160 strike. Okay. The 160 strike. All right. The puts are everybody's buying the 155 strike. So even if you think it can go to 157, The puts are telling you that it's probably going to 155. Then you go over here and then you decide to trade. You wake up that morning, you say, Joel says get in at 9:45. That's going to tell me what direction to go. At 9:45, all you saw was red. Anybody buying Apple to the upside does not know how to trade. You don't. You're terrible because you don't know fundamentally how to be on the right side of the trade. Because I'm on the right side of the trade probably 70 to 80% of the time. So if you're not trading like me, you on the other 20%. And every now and then your 20% side will win on the days that I lose. But you're not going to consistently be able to make money like I do because I'm going to go with the trend. And if the trend tells me to go down, then I'm going down. And how much am I going to go down? I'm going to go down $5. So 157 should have been the first area you thought. Look at what happened when we got to 157. Why did we bounce and then we went sideways? I'm going to tell you why. Because only 1% of people know to trade this way. And I'm one of those 1%. That's why it took a long time right there. It spent the most time this morning at 157. But if you didn't know where it can go to in the first place, you all over the place. Well, no, it's this indicator and it's that indicator. And then I flip to this chart and that chart. Who are you learning from? It ain't me. It ain't me. Because Joel makes it easy. And he makes money consistently. And I have receipts to show it. Maybe you don't like my style. Well, don't you like money? It went down. It told you to go down at 940. What color is this? Red. Like, why would you be going this way? Because you're trying to buy low and sell high. Because you have an investing mind and you haven't converted it over into trading yet. That's why you're struggling. You don't know how to trade the market fundamentally. Okay. All right. That's Apple as a trade. Okay. And it actually went lower. You remember that 155 strike we saw? Look at where it went to, guys. 155. Almost to the dang. Look at that. 155. You would have known where to go to. All right. I teach that in that 60-minute trading video. Learn it. It will make you money. All right. I got to breeze through these because I actually have to get out of here. This might be the first day I don't get to everybody's stock because I haven't been doing this in a while and I apologize for it. All right. Lamb Research. All right. Lamb Research went through the 200-day and we're in a downtrend. Now, as an investor, you can buy anytime you want to. As a trader, you might want to trade to the downside if the 1-hour chart is telling you to go down too. And if you had taken that, if you had listened to what the 1 hour was telling you, you would have made money. Please, guys, please make trading easy. Y'all be making it hard, struggling. I don't want to see y'all struggle. I want to see y'all see this above the Ichimoku and say, I'm going to trade it to the upside. I don't care what the news is telling me. I'm going to trade this to the downside. It's because this is the polygraph. The polygraph, the Ichimoku is telling you real buying, real selling, real buying, real selling. I don't care what they're saying on TV. Real buying, real selling. It's real selling. So you should be short. As an investor, does this matter? No. As an investor, this matters. As an investor, this matters. It's going up. Great. How much do I want to buy this, on sale? And I got to stomach it, right? And if I'm buying it as an investor, I'm not putting all my money, I'm not putting all my eggs in one basket from the beginning, right? It's down 36%. Buy it. So what if it drops another 25 or 30%? You're thinking 2, 3, 4, 5 years out. Who cares? The more it drops, the more you should be buying if you believe in the company, if you did all of your homework. All right. What's your opinion on averaging up buying stocks every month, no matter what the price is? Yes. When you're dollar cost averaging, when your portfolio manager is managing your money, they're not buying it every time the market's down 20%. If you got a 401k and you're putting $1,800 into that account every single month. That money manager's taking your $1,800 and reinvesting it in the S&P. That's as it goes down and as it goes up. They're buying it every 2 weeks on the first of the month. So yeah, I don't mind you guys averaging up. Averaging up means that hey, they're going to buy it at 500 and then 600 and then 700 because that's a long-term strategy. Now, I see people that average up even when they're trading. And to be honest, the advanced, super advanced traders, that's how they tell you to buy because you always want to lose with the least amount of money in the market, and you always want to be winning when you have the most money that's in the market. So averaging up or down can be a strategy. I can teach you guys how to go both ways if you guys do a consult with me. All right. Someone said I missed those early opportunities because of the bogus thousandaires. Exactly. Thousandaires do not, guys, you will be surprised how many people in the insider trading room are. Well, there's a lot of people in the room that are thousandaires, but you'll be surprised at how many people that are in the room that's telling you guys what to get in and out of, and they don't even have an investment account with more than $2,000 in it, right? They got a $20,000 day trading account and then got $500 invested in the market. And then they're trying to teach you how to invest. I have this thing. Anybody that you guys are learning from, any teacher, if it's your mom, your dad, your friend, your uncle, your aunt, I don't care who they are, ask them one simple question. How much money do you have invested versus out of all the money that you have liquid? I don't care if it's real estate or any other businesses. How much money do you have invested and how much money do you have trading? If the answer is more than 50% of their assets is in a trading account, run. They are afraid of the market. They hate the market. They cannot teach you how to invest. They're going to be bears. They don't know how to get to $1,000,000 because they're too afraid to invest in the market. And invest wealth is where you're going to get your investments. Remember, I do consultations. I look at people's portfolio. I know how it's constructed. There is a simple rule. If you're not invested in the market in anything, how are you going to get to $1,000,000? You're not going to get to $1,000,000 trading. You can if you reinvest those funds, but more than likely you're not going to. So you guys got to stay away from your aunts and uncles and friends that don't have no money in the game because they don't know how to invest. There's never a lower price. It's always too high to them. And then when the market starts to go up, look, they get you on both ways. When the market's down like this, they say it's going lower. When the market goes up, they say it's too high. So when they go invest in the market, they don't. All right. And then they keep you out of the market. I ran it on that because that's where a lot of you guys are sitting at. All right. Let's look at PayPal real quick. I think I got like 5 minutes. I'm not going to get to everybody's stock, and I feel bad about it because I promised that I was, and I apologize. All right. PayPal is way down here. Now, there's some major support at 82. I'm going to buy a whole bunch more. Now, let's look at a month chart because you got to see what's going on with PayPal. PayPal, guys, is going back to the March lows in pricing. So the March lows, PayPal hit a price of 82.07. If it hits 82.07, I'm sorry. Everybody in the room has to buy a share of PayPal because you can't. I don't care if you hate the company, you gotta buy it because it's the lowest price it has been since the March low. You gotta buy it. You got to just buy it. We gonna all have fun. We either gonna make money together or we gonna lose. I got an alert here. If it hits 82.07, I want everybody in the room to buy it. All right, I might get in trouble for saying that because we can't pump and dump. But Joel's gonna be buying it at 82.07. All right. And the reason for that is that every stock that was speculative during this period reversed and went back to its 2020 lows. Well, PayPal is almost there. All right. Delta Airlines, guys, stay away from the airlines. Airlines suck. Why are y'all buying this? Look at this. This is terrible. Terrible. This was Delta before the pandemic. Before the pandemic, no, this was March low. So Delta actually was going up. I apologize. It was the other airlines. Then it dropped in price. Then it got above it. Now we're below it again. And the 200-day is angled down. I think Delta gets back to the pandemic lows. All right. So there's a way to go. It's almost 50% from where we are right now. So it looks like it's in a downtrend. I wouldn't be buying it yet. And then even on the hour chart, it's down. So be careful. Let's look at Okta real quick. I got an eye appointment with Warby Parker. That's at 4 o'clock. So I'm trying to get out of here so I can go to it. All right. Uh Okta on the hour chart, there's downtrend. All right. So you shouldn't be buying it with options to the upside. And even as an investment, it's underneath the 200-day, but it's in a downtrend. All right. It's got to break above here first. And if it breaks above here, we would hit the 227 area. But it looks like it can possibly fall down here, guys, to this $89 range. We got to get back to 180 if it's ever going to go higher. It's got to go higher first to go higher, but it looks like it wants to go lower. I do not like Intel. Why are you guys buying Intel when you can be buying NVIDIA or AMD? Now, what I like about Intel, gotta leave here soon. What I like about Intel is that you got some support right here at the 44, look like the 44 level. So if you're going to buy it as an investment, that's a great place to buy it. But again, it's in a downtrend. And if you're trying to buy 7 to 14 days out, doesn't look like it wants to pop. Can it pop? Yeah, but it doesn't look like it wants to. All right, somebody, Shana said, what's your outlook on the market for 2022? This is an investment year. All right. I told you guys about a week or two ago that after all the news that we had that came in, this looks like a readjustment year. This is a year where everybody's firing their employees that aren't performing, and they're figuring out who their core position is. Fire those stocks that aren't performing well, keep that core position, and then maybe even reinvest in those core positions, and then look for 2023 to get paid. All right, IIPR is now the largest cannabis company on the planet. All right, what do I love about it? All right, it's a real estate investment trust. It's a REIT. All right, it's one of the best companies that are out there because they're renting out their facilities to these growers. So they're going to get guaranteed money whether this grower makes money or not. Okay. So I really like the company. The 200-day is still angled up. This is one of your better cannabis companies, even though it dropped 43%. That's not bad considering that every other cannabis company was terrible. When that 500 trillion gets signed, you think crypto is going to rock also. All right. It's actually 5 trillion. And I don't know. Crypto's been doing extremely well during this period too. So, with cryptocurrency stabilizing and not drop, like normally during a period like this, crypto would be down 70 or 80%. And it's doing extremely well at this particular time. But crypto is a speculation play. So it looks like everybody's selling speculation and getting more into stock picking and companies that can prove themselves. And they're staying away from the speculatory companies for now. If you are in crypto, though, there's also your main companies like your Bitcoin, your Ethereum, Solana is starting to become Cardano. All of those are becoming solid companies. So the top 10 is what people are investing in. And it looks like the speculative cryptocurrency people are starting to shed those and then reinvesting into the major ones, the same way that we're doing stocks. All right. Someone said 10 plus years. Thanks, bro. Love the community you've created here. I appreciate the love. Intel, well, we looked at it long term. Thanks, bro. Love the community you've created here. No problemo. Let's look at Starbucks real quick. Starbucks looks like it's dropping. All right. Looks like it's in a downtrend. 200-day is angled down. Looks like everything wants to go back to their March lows. I know that's far from here, but it's not. If you told me from 120 it was going to go to 50, a 50% drop, I would have said, haha, whatever. but it's close to it now. If it drops another $20, that's only a 25% drop. Looks like that's where it wants to go. If it breaks 90 and starts to go up higher, we're going to get to 110. So it doesn't mean it is actually going to happen. But remember, stocks are going to pull back 25 to 50%. So if you were using your Fibonacci tool, it looks like we're at that 50% area right now. So, Moderna is what a lot of people are talking about as well, right? Moderna is one of the leading companies that are out there as far as the as far as biotech companies, right? You got the vaccine that's out. I'm surprised I don't have more information on this. I must have deleted it. All right, but Moderna is it's not that big. Well, it is big in comparison to other companies, but Moderna is a $56 billion company, and you're talking about a stock that went from $400 to 130. So a lot of people are talking about buying it now. You know, it was 140 to 140 to 400, 140. It was almost 140 billion dollars in size, and it's now 50 billion. So it still has room to grow back to where it came from. But let's see where it is in comparison to where it was in March during the March lows. So during the March lows, in 2020, well, it's not going back to that price. Well, it could. This is what's happening right now. So it's in a downtrend. So it looks ugly. It looks, it doesn't look like it can go back up. It looks real ugly right now. So, as a investment, this is a speculative company. This is what people are selling right now. Okay. And then they're jumping into something like a J&J, right? Because it's more stable. You see that? It's more stable. They're selling their Moderna and putting it into J&J until the market tells us what it wants to do, and then they'll probably jump back into something like a Moderna again. Someone said, Jamel said, appreciate your knowledge and dedication to this. No problem. I'm just showing you guys when I'm buying on a daily basis. Charles is always laughing at me. Yep, those stocks are going to be going down to that $150 price once they do their reverse stock splits. That's Amazon and Google. I don't know if Google is. I got to do the numbers for it, but it should be around that number. Charles asked, can you talk about pairing stocks again? Looking for something to pair Roblox with. I was thinking you. All right, so guys, so pairing is when you're buying stocks, you should always buy a stock that has a friend that goes like if you're gonna buy something like a Nike, you might want to buy a Lululemon. You always buy in pairs. If you're gonna buy Uber, you might as well buy Lyft, right? If you're gonna buy Amazon, you might as well buy Shopify or buy something like an Etsy. All right. So he's asking what can I pair with you? Well, you can pair Facebook with Roblox, right? Because if you're thinking about the metaverse and Roblox is one of the leading companies that's in the metaverse space. Well, the leading metaverse company that's out there is Facebook, because not only did they change their name to Meta, but they also own the Oculus device, which is the number one used virtual reality device that's on the market that allows you to go into that metaverse space. But Unity is also another one that's really, really good. But look, it's sold off in price, but there is a rumor that there's another big company out there that's looking to buy them. So, buy those and buy in pairs. All right. Somebody says, so should a person wait for the split, buy now, or does it matter? I'm a noob, by the way. Well, what most people usually do is when they hear about a stock split, they trade into the stock split and then they sell shortly after it splits, because now the news came out. Once it splits, it does go down in price and more people start to buy it again. So you can go either way, but if you buy it early, if you're up enough, if it drops in price, then you can stomach it dropping in price and seeing what happens, once all of the what's the word I'm looking for? All of the joy of buying that stock goes away. So, good old Noble says the market went from bullish to bearish. Yeah, the market went from bullish to bearish just like that. And if you can't switch and change with the market, right, you're gonna get left out there. And there's nothing wrong with being bullish one day. Like you guys were laughing because me and Noble were bullish one week, and then the very next week we was bullish, and y'all were like, man, these cats are bipolar, or they just trying to bandwagon. And the answer is, yeah, you bandwagon as a trader. You're supposed to be a bandwagoner as a trader. There's nothing wrong with seeing everybody hype about a stock and you say, you know what, I want to make money 7 to 10 days. But yeah, what you guys are doing is bandwagoning on a stock as an investment after it's made its run. And that's where, you guys got to learn how to look at the charts and then figure out your strategy on positioning yourself in that particular company. All right. Woo. In your opinion, how long do you think the downtrend in the market will last? Probably a year. All right. Most people are saying till about mid. You still got midterms that are coming out. There's so much uncertainty out there. You got the midterms that are happening. You got China might invade Taiwan. You got again, you got the midterms coming out. You still got Russia and Ukraine. Like we haven't resolved that. So because this is the beginning of the next earnings period, well, you go 3 months out. So you had January to March. Well, the war didn't end. So now everybody's looking out to June. So at least till June, until we get some of the uncertainty out of there. So if you're looking to invest, there's a 3 month period. We're gonna wait and see what's happening then. If everything looks good, you might see the market turn around in June. If not, it might be September. It might be the end of the year. But I would say for the longest, maybe 12 months. Because after looking at the last, looking at the VIX and seeing what happens once we get above the VIX, usually within 1 year's time, you're usually back to that uptrend that everybody is looking for. When the market sells off, it sells off really hard. When it goes back up, we always say that the market takes the elevator down and then we take the stairs back up. So we grind, slow grind up, and then we take the elevator down. All right. So on a day like today, the market was up around 1 to 2%. What would clue you in to go short? If I was to go short and I was day trading, I'm gonna look at that Ichimoku. If I'm below that Ichimoku, I'm gonna short. If I'm above that Ichimoku, I'm gonna go long. But I need to know how much it can go, right? If it can go 5 or 10 points and the stock has already gone its 5 points or its average true range, I'm not gonna trade it. I teach all of this stuff in the 60-minute trading video. I got through everybody's stocks like I said I was going to do. Sorry, guys, I got to get out of here. I'm coming to you guys from Decatur, where it's greater. Good luck. Share this video with your friends, and I'm out of here. Peace.